I just don't think anyone could convince me that letting this trade come and stop me out for a full loss makes any sense at all. Hey there, welcome back to the channel. It's Flexing Joe, and today's topic is probably going to set some people off, and I think that a lot of people are going to disagree with me, but that's okay. It's a conversation that needs to be had, and it's about how the risk reward evolves when you're in a trade. Before I get into this, I want to give credit where credit is due. I learned about this concept from Trader Dante. Even Milo, right back here, is joining in for this one because he knows. Let's not delay this any further. We'll jump right into an example that I've queued up. The best way to tell Trader Dante's story is to illustrate it. Say you're floating a very large position here in profit, and your stop is still in the original position. You are not risking $18,000 in profit here. You're risking $18,000 plus the $33,000 in profit that you're up. Nearly $52,000 that you have for risk on the line. And the only thing you're targeting is the difference between your current profit right here, $33,750, and this TP right here. You actually are targeting $8,000 while risking $52,000. That just simply doesn't make any sense, right? You're thinking, wow, I didn't think about it that way. That's a lot of risk. Let's think about it in a different way. You're risking 260 points, targeting 40 at a 0.15 reward to risk. Absolutely atrocious. So Trader Dante's story is, if he reached over my shoulder right now and closed out that position, the average trader is going to look at him and be like, yo, Tom, what the hell? You just closed me out of a winning trade that was about to hit TP, and you still had your stop down here. So Tom says, no worries. Just enter back in where you were. Enter in right here and put your stop all the way down here and your target up there. Would you do that? Of course not. Of course you wouldn't do it. It just doesn't make any sense. That's Trader Dante's story, right? That's the story he uses to try to bring this home. So visually, I'm just building off of that for you to see that this is tremendous risk. Even if this is just one micro, the math of that risk reward just does not make any sense. It's just not a trade 99.99999% of people would logically take in their right mind. This example on YM is a trade that I took today live in the Discord. This trade fits the system that I teach around my orb strategy with the 2-minute 20 EMA pullback. If you're interested in that strategy, there is a link in the description box below for you to get the free PDF. Go ahead and check that out. Here's the entry, here's your stop, and here's your target. Let's go ahead and click through this. At this point right here, you're at a pivotal moment. You're approaching your target, and you've broken this most recent pivot over here to the left, and you still have your stop all the way down here. Does it logically make sense to give up all this profit and let the trade go red? It just doesn't. Moving the stop into profit protects some of the capital that you've earned, ensures a winning trade, and you're still risking. That's the thing most people don't understand with an evolving risk reward, is that you are still risking a considerable amount here. You're risking, if you're up, let's just say $3,700 right here, and your stop is only at $750, you have $3,000 of risk on to potentially capture only $600 more. Even that sounds illogical. But thinking about it this way, if you had your stop down here, you're risking $3,700 in profit plus this $2,300 stop loss. You're going to risk $6,000 while you're trying to only make another $600. That's 10 risks to 1 reward. That doesn't make any sense. The closer I get, this is just how I personally do it, the closer I get to the target, the more I just start to inch that trail up, inch that trail up, inch that trail up, right? And ensuring that I have a profitable trade. Sometimes, yes, it's going to come back and tag me out, and then maybe later it goes up to that take profit. But I also know that even more times than not, it protects me from losing trades. Here's a great example where adjusting your stop loss can save you from a potential loss in real time. Say you were in this trade, you entered in short, you have a great entry off of the 20 EMA, you see that price is making lower lows, you think it's pulling back, and you're targeting a new low of day. So your target is here, and your stop loss is, let's say here, right at the orb. Let's go ahead and put this tool on as well. Pretty solid RR on this trade, right? Let's watch this trade play out. Look how close you are to that take profit in just 2 candles, right? You enter here in this first candle, next candle, you're almost there. That looks really strong, right? It looks like the bears are in control. If you just sat back and didn't do anything and didn't manage this trade, look what's going to happen. You're basically back at break even. Okay, fine. You're stopped. In that instance, you were up considerably. You were only 10 points away from your target. And instead, you let this trade come back 103 points to stop you out. That's one of those situations that just doesn't make any sense. If we think about when price was down here and this candle stopped, time stopped, but I reached over and I I stopped you out of your position. I took profit right then and there. Joe, what the hell? I was about to take profit. I was about to hit my target. Okay, well, let's re-enter down here. Let's re-enter right at the open of the next candle and put your stop in the same spot that it was and put your target back at low of day. A 0.22 RR? Like, come on, it doesn't make any sense. That's the point of this video, is that risk reward evolves in a trade. I'm happy to continue this conversation further in the comment section below. I would love to know what you guys think about this. But to me, when I have a trade that's working and it's more than 50% of the way to take profit, it's just only logical to make the move, to move my stop up to the break-even side of the trade. Sometimes I know I'm going to get hit, and then it's going to hit my stop, and then it's going to go to target. That's okay. That's the risk I'm willing to accept versus me taking the full loss. Whenever I move my stop up to break even, I essentially have a risk-free trade. I've taken my shot at the market, and now I can let it play out with no financial implications at all. That's my personal preference. One other thing you can do is to track your data over time. If you find that you're consistently getting wicked out because you move your stop to the green side of the trade and then it goes to target, maybe you can reevaluate your decision-making process as to whether or not to move it, or whether or not you move it at a certain point in the trade. Do you wait until you're deeper in profit, and how does that make a difference? You may also find in your data, you may have been able to avoid a certain percentage of losses had you gone to break even that were going to be losses no matter what. So there's two sides to this, and make sure you evaluate your own data for your own trading. None of this is financial advice, just simply for discussion. And I really want to hear what you guys think. Comment down below, and don't forget to subscribe for more videos.